How's it going, guys? My name is Caleb Kioh, founder of Wallet Guide, and we are here, part 2 of the tax game. Actually, the ultimate guide to understanding your taxes with John Dundon. All right, part 2. Hi, John. How are you?
Doing great. Thanks for having me today.
Absolutely. Gosh, I was just thinking back the last time we did part 1, and I think, was it like 4 or 5 years ago?
It's been a while, yeah.
My goodness, time has been flying, and boy, part 1 was so power-packed that I was like, you know what, we have to get John back. We have to have a part 2. For people that don't know about you, John, walk us through your background. Tell us, first of all, why did you choose taxes, and what gets you excited about taxes?
Well, thank you for asking. I think taxes chose me.
Okay.
Yeah, I ever since I was a little boy, my first job as a 12-year-old boy was to take handwritten tax forms prepared by my dad and put them in a typewriter with carbon paper so that his customers, his clients, could see tax forms that were typewritten. This was 1976, and it was the advent of the first personal computer on the desktop, and he wanted to look as professional as possible, and so my first job was taking tax forms and transcribing them using a typewriter, a manual typewriter, I might add.
Yeah, but a time machine.
That's right, I'm dating myself here. That was 1976.
And a task for, you said a 13-year-old, 12-year-old?
Yes, that's right.
Man. That's right. That was your introduction.
That was my introduction.
And did the clouds part from there, or like, and that was your introduction? Like, you must now be in taxes from there?
Well, I think it's in the genes a little bit. I will just quip real quick that my second job was actually fixing typewriters. And so, but I did eventually come back to the realm of taxes. So,
okay.
Yeah.
No, nice. And from there, walk us through a little bit, after that experience, what got you then being in the industry?
Yeah, so I went to school, got my undergraduate degree, took the first job that came my way, which was as an investment advisor with A.G. Edwards & Sons at the time,
okay.
1986. Lived through the stock market crash of 87. And realized that I didn't have the disposition to be in that line of work long term, and decided to retrench and go back to school. Got my graduate degree from the University of Minnesota, and from there went into private practice.
And how was that? Was it everything that you envisioned?
Going into private practice?
Yeah. Yes.
It was challenging. There was some very, very dark times in the beginning.
Okay.
And you just needed to persevere. Absolutely. You needed to wake up every morning and you needed to get your job done. You needed to serve your clients. You needed to spend time researching and understanding the changing tax laws. And you needed to be able to effectively apply those. So, yeah. But over time, things got better, and here I am today.
Here you are today.
Yes.
I mean, so let's dive into that a little bit more, because you talked about a little, when you talked about your private practice, you talked about the challenges. So let's talk a little bit more about taxes and those challenges. Why is, in part 1, I remember I was talking about how if you're in a room and or a party and you mention taxes, people run.
Right. That's right.
So why is tax? Why has it gotten such a bad rap? And then why is it so complex? Let's start from there.
Oh, okay. Well, good. Yeah. So, taxes are complex for a wide variety of reasons. I'm going to refer to 7 different reasons why taxes are so complex.
Sure.
Understanding taxes can feel overwhelming for millennials and most people, really.
Sure.
Because the tax system in the United States is inherently complex unto itself, and the demographic faces a unique set of fiscal challenges. And I'm going to talk about 7 reasons why.
Sure.
Okay?
Yeah.
The first reason is that particularly for young folks, 25 to 34 years old, they tend to experience more life-changing situations.
Sure.
What am I talking about there? Millennials are often in a stage of life where significant financial transitions arise, starting new jobs, getting married, buying homes, paying off student loans, starting families. And each of these life-changing events has tax implications, and understanding them is challenging. So they're coming at you at rapid-fire pace, more so than when you're more established, and it takes time and energy to keep up with them.
Sure.
For example, if you are contemplating marriage, should you file married jointly? Should you file married separately? That's a huge question that a lot of people dating and contemplating marriage don't even bother to talk about until they have to file that first set of tax forms. The second thing that is making it challenging is it seems as though a lot of people, particularly younger people, are interested in having a side hustle.
Yeah.
And so people that are leading the charge in the gig economy with, many taking on freelance type work, create new streams of revenue, need to understand that there are also tax implications associated with that. And, many people aren't taught how to handle taxes for self-employment in particular.
Right.
Most folks don't even recognize that it's a pay-as-you-go system. Taxes aren't due. The forms are due on April 15th, but you need to pay your taxes as you earn your money throughout the course of the year, either through withholding or by making quarterly estimated payments. So there's this general lack of financial or tax education that seems to be prevalent for folks that are under 35 years old. And then, of course, there's the complexity of the tax code. I mean, it is changing every single day. There's procedures, in particular, that are issued by the IRS every single day. There's new tax statutes. There's new regulations being promulgated every single day. And so keeping up with that is challenging. I probably take over 125 continuing education credit hours a year, and I still find myself challenged.
Wow.
And so, it can be quite overwhelming. And then, of course, there's the fear of getting it wrong. And there's all sorts of other misconceptions about taxes as well. A lot of misinformation floating around today, particularly on the internet. So you need to tread lightly and be careful that you're acquiring tax knowledge from someone who spends their time, makes this their vocation to continually try to keep up with the tax code.
Yeah, that's right. And because you also mentioned, and how long have you been in this tax space, in this tax industry?
Well, for hire, going back quite a ways, 1992.
Wow.
Yeah.
Wow. And just for the audience, if you don't mind, giving them a little bit more background of what type of tax professional are you? Because I know there's different types, right?
Right. Well, that's right. We all have our specific specializations. And so thank you for asking. That's a fabulous question, by the way.
You're welcome.
So one of the things that I like to hang my shingle as is being someone who likes to reconcile disputes. When the taxing authorities come at us and accuse us of impropriety, I like to make sure that the tax authorities aren't overreaching their step. And so oftentimes taxpayers that have more complex profiles tend to find themselves in situations where there are sections of the code and there are regulations that are conflicting and are misunderstood and have been untested. And in those particular situations, the IRS or the state of Colorado or any state taxing authority might interpret a regulation one way and a taxpayer might interpret the regulation another way. It's not as though the taxpayer is trying to rise to the threshold of being criminally negligent. Perhaps they're just misinterpreting the statute. And it's also not necessarily the case that the governing authorities are systematically overreaching. Oftentimes there is a middle ground, and I like to find that middle ground for people when there are disputes. So that is particularly relevant to the examination process when you get audited, and of course the appeals process. Now I've graduated myself. I no longer do collections work. So once your matter has gone to collections, I usually refer that service out to someone else. But Caleb, I'm going to be completely candid with you and let you know that the real bread and butter is on the compliance side. Just making sure that you're doing the bookkeeping and the accounting and the tax preparation and the tax payment timely and according to certain standards. That's much more predictable business. It has a much more stable cash flow and stable margin. And so even though I hang my shingle out as being someone who reconciles disputed matters, my bread and butter really comes from a back office support mechanism for most small business owners with gross receipts up to about $25 million a year.
Interesting. And then I also know, or at least last time we talked about the different, because there's CBAs, right, and then there's different types. In your case, you're an advisor, right? A tax advisor, if I'm not mistaken, correct?
Right. Well, I hang my shingle as being a tax consultant. My license is issued by the United States Treasury Department. It's referred to as an enrolled agent.
Perfect.
So it's a federally issued license by the United States Treasury Department, and it allows me to practice representing U.S. taxpayers all over the planet.
Wow.
And in fact, today I can share humbly with you that I have clients on 6 of the 7 continents.
Wow.
Yes.
Big time. We have big time on the podcast. I told you, John doesn't mess around. So let's even keep going deeper, because you mentioned about, you being very studious about all the different certifications and learning a lot about taxes. And then we also talked about the changes. So let's talk about those changes. What changes have you seen in 2025? What has been the biggest trend you've seen in the tax world?
The biggest changes in the tax world.
For 2025 that us taxpayers have.
Yeah. So I think the biggest change right now that most business owners are wrestling with is a new regulation called the Beneficial Ownership Information Reporting Requirement. This is done directly with the United States Treasury Department, and it is a artifact of the Corporate Transparency Act of 2021, signed by President Trump in his first term in office. And it was meant to curb money laundering, believe it or not.
Interesting.
And so now, unless specifically exempted by statute, business owners are obligated to report directly to the United States Treasury which companies they own by disclosing either their passport information or their state-issued driver's license. And at issue is that the 5th Federal District, a judge in Texas, has issued a temporary stay on this filing requirement, questioning the constitutionality of the requirement.
Interesting.
And presently, the United States Treasury Department is encouraging people to disclose their ownership information voluntarily. It's not mandatory yet, but my tax nerd friends and I have looked at the stay. We have looked at the statute. We have looked at the Treasury Department's appeal. We believe the Treasury Department will prevail on appeal, and this reporting requirement will become mandatory in very short order. And go ahead.
I was about to say, what are the implications of this?
Well, the intent of the statute was to curb money laundering. And so, believe it or not, even though it came out of the Trump administration, it was a valid statute. And we're pretty confident that it will become mandatory. So failing, once it does become mandatory, failing to timely file, the penalties, if you're accused criminally, start at $10,000. And so the penalties are huge out of the gate. And so all you're disclosing to the United States Treasury Department is either your state-issued ID or your U.S. passport. And so one governing authority or another already has this information. And so we don't think that taxpayers will be harmed by voluntarily disclosing. And we're encouraging everyone to do it because we're pretty confident it's going to become mandatory in short order.
I see. Yeah, because lately I've been getting a lot of I've been kind of seeing it, whether it's on my Facebook feed or certain people telling me about these different things that I need to file coming up this year. You know, there's these, I forgot the name. I haven't really looked deep into it, but it seems as if like certain people are becoming almost like tax experts these days or whatnot, but I've been being suggested that like, hey, this reporting thing is coming up, or this new reporting style. Is that what this is all about? Or is there even more stuff, or tax forms or reforms or whatever that's going on that is also surfacing?
Yeah, well, the Beneficial Ownership Information Report directly with the United States Treasury is the big one right now that And to your point, there is a lot of misinformation circulating in social media right now. It's a free filing obligation. It costs you nothing. The secret to efficiently filing in 5 minutes or less is making sure that you have a JPEG image of your driver's license easily uploadable to their Treasury site. And you can get the filing done in literally 5 minutes or less. And so that's the other reason why we're encouraging people to do it, because even though it's a hot topic today, it could fall out of favor quickly, and it would be, once it does, it could be very easy to miss. And again, if you miss, the penalties can start as high as $10,000, $500 a day
If you miss filing it.
when it becomes mandatory. Right now, it's a voluntary filing obligation.
Do they look at certain types of like criterias or like income criterias or whatever, or is it all businesses has to do it?
It's generally all businesses unless specifically exempted. Okay, so like a nonprofit would be exempted, for example.
I see.
So generally speaking, the general rule of thumb is if you're registered with the Secretary of State in any state, Colorado here, generally you should look to see if you might be exempted, and if you're not exempted, you should go ahead and voluntarily file as the guidance we're offering.
And so you're saying nonprofits are probably the only organizations that are.
There's a list of about 13 organizations that are exempt, and I can look those up for you.
No worries. Okay. Well, good stuff. And so now so that's the biggest change you're seeing for 2025.
At the federal level, yeah.
The federal level,
yeah.
Okay. So now, I know myself. I've really been a big tech nerd for a while now, and I've been following tech. And matter of fact, there's this term called technological singularity. It's a super nerdy word if you ever heard of it. And it's this long story short, it's just this concept where technology can get to a point where it can start growing so fast that it can be essentially irreversible, and essentially we then could find ourselves almost in like this sci-fi situation. And I bring that up because the next topic I want to talk about is AI, right?
Okay, yeah.
In the tax implications of AI and what this new world, almost, if you want to call it, that we're entering in the world of AI, and how that looks like now. I've been watching a lot of different podcasts and YouTube stuff and things and theories of how the world can look like when it's fully AI, where basically AI, or they call it AI agents, starts taking over our jobs. And we get into a situation. Matter of fact, I think I heard from Eric Schmidt in his book Genesis, which is a fascinating book, by the way. Eric Schmidt, ex-CEO of Google, he talks about how in the next 2 years, 50% of jobs are basically, actually, he didn't say that, but there was another very important tech leader that said 50% of jobs will be gone in the next 2 years. So, of course, these all have profound implications, right, to the workforce, to all these sort of things, to the economy. And then there's been some proposed programs as a result, UBI being one of them. And then there's a host of different types of these sort of programs where I guess it seems like they're looking to tax AI companies or all these sort of routes, I guess they're trying to go to be able to help people that are unemployed. Right. So I want to bring that up in terms of when I say UBI to certain people, certain people roll their eyes. There's all these different reactions, which is always interesting for me to see. And first of all, I want to kind of get your perspective on, first of all, UBI as a general program or any similar type of programs as it pertains to kind of like an option of helping the people that are unemployed. So what is it according to your, according to you? And then let's talk about how could it even be feasible to create these sort of programs through taxes?
Universal business income.
Yeah, universal basic income, UBI, and then there's a variety of different sort of programs out there to it.
Okay, well, so just backing up the bus a little bit and talking to you a little bit about AI in the realm of taxation.
Yeah.
My experience with AI models is that, particularly with regards to matters of taxation, is that they need to be trained. The whole concept of AI, as I understand it in the realm of taxation, is that they're only as good as the trainer is training it. And by training it, I mean making sure that you're asking it correct questions. And so some of these more robust AI models are really good at learning if you're a good teacher.
Right.
But if you're not a good teacher and you're not asking questions that will allow the AI models to improve their efficacy, you might find yourself marching down a path, particularly with the realm of understanding tax statutes and regulations, of getting it wrong. And so there is a very big and real fear of using AI models and having your AI model provide you inaccurate information that might cause harm. So you need to tread very lightly right now when it comes to AI and matters of taxation. I've spent about 12 months or so now training my AI model, and it is very robust.
So you do use AI?
I do use AI.
Okay.
And it's not foolproof.
Okay, sure.
And so one of the things that I do is every U.S. tax court case that is decided, I will run it through my AI model, and I will test my AI model, and I will make sure that my AI model is subscribing to the correct tax court rules, the correct Treasury regulations, and the correct statutes, and applying those to the judge's determination. And that is how you develop an AI model in the realm of tax. There is no better way to do it. There's a lot of heavy lifting that goes on, because you not only have to plug the memorandum into the model, but you also have to read the memo and make sure you understand the memo and compare it to the model, what the model's results are.
So you don't want to just take ChatGPT at face value?
Not to start.
Okay.
It does get better, though.
Sure.
If you are disciplined in your approach to how you're asking it questions,
sure,
what I like to refer to as training it.
100%.
So, did you have any follow-up questions on that, or would you like me to go on about universal basic income?
No, well, actually, no, because you brought up a great point. And I remember in our part one, it's almost like deja vu, but in our part one, we were talking more about TurboTax versus humans. Now we're talking about AI versus tax AI, or ChatGPT, chatbots versus humans. And so I before we transition, I definitely, because I think this is a very important point that you bring up here, and understand how to prompt these chatbots correctly. So if you don't mind diving a little bit more deeper into that and the importance of making sure you either have the right prompts, or you're asking it the right questions, and or how you can still leverage ChatGPT or these different AI chatbots with an actual human or whatnot.
Sure. So what kind of prompts do I use?
Sure.
Yeah, we can start with that.
Yeah.
Let me give you an example. Taxpayer decides to sell a rental property that they have, and they're under the impression that they're entitled to an exemption from capital gain on that rental property because they may have owned and occupied the property for any 2 of the previous 5 tax years, for example, which is a valid criteria for being exempt from taxation on the sale of a rental property. If you own it and occupy it and treat it as your principal residence for any 2 of the previous 5 tax years, you're entitled to an exemption, $250,000 if you're single, or $500,000 if your filing status is married joint. Now, in order to address that question, the prompt that you would ask your AI model is my rental real estate property exempt from capital gain taxation? And here's the clincher. You insert the words, please cite Internal Revenue Code and Treasury regulations and revenue procedures. And it obligates the AI model to go in and scan the code, scan the regs, scan the procedures, and respond accordingly. And when you ask it to have that specific nuanced prompt, that's how you train the model to go in and look at the code, look at the regs, look at the procedures.
Sure.
Look at the forms.
Yeah. No, and that's super important to, first of all, just like know how to train and where to direct the AI, which is super important. No, that's definitely a great point there. Let's then actually transition from that to now getting into the UBI conversation.
Mm-hmm. Well, so universal basic income and similar income programs, which provide regular payments to individuals regardless of employment status or income, can have implications for eligibility for tax credits and deductions. Since these programs are relatively new and vary in structure, their impact largely depends on 1, how the UBI payments are classified, and 2, the specific tax credits and deductions in question.
Sure.
So let me give you a breakdown. The tax treatment of UBI, for example. Before analyzing its impact on the tax benefits, it's important to understand how UBI is treated for tax purposes.
Yeah.
With regards to taxable income, if UBI is classified as taxable income, it must be reported on your tax return, for example. This increases your adjusted gross income, which is a critical factor in determining eligibility for many tax credits and deductions. If it's treated as non-taxable income, similar to some government assistance programs, for example, it does not affect adjusted gross income and has no direct impact at all on eligibility for tax credits or deductions. Most proposed UBI programs today have classified payments as taxable income, but this could vary depending upon the program's design.
Sure. Let me then ask a follow-up question even before, and I appreciate that breakdown there. What, first of all, do you feel like is the feasibility of a program? So if we want to take a step back to like that question where what I was talking about before, like, because I don't know if you've heard of this term called AGI, which is a term called artificial general intelligence. And it's a world essentially when the AI becomes pretty much intelligent enough to basically start being conscious of itself. Or you can even say it's able to start having full-on communications with us in every subject.
Mm-hmm.
Sure. So, and then of course, the implications of that world is where the AI, you can start having AI, call centers. You can start having AI doing, and then AI agents, they can surf the web. So essentially all of that means job losses, right?
Right.
So in a future then where now AI has taken over, I know in our part 1, we talked a lot about the wealthy individuals and the tax breaks, and the tax implications for them versus the middle class and the others, right? So it does look like AI it's opening up this very dystopian sort of future where the haves are going to have more because the companies are now going to have all this efficiency with AI, and yet they're going to be laying off people, right?
Right.
And so then now you're going to have people that are unemployed, but companies are going to be wealthy. They're going to be getting richer and richer. People are going to be employed. So it's going to be an employment crisis that's coming, right? With AGI, and then there's even more super AI, super intelligence. In a world like that, I'm curious. First of all, like how feasible understanding with the understanding that you have with taxes and the tax laws and stuff like that. What just generally speaking, do you feel like programs like UBI and others could be feasible and could address these current issues that will come up in this new era?
That's a great question. Wow. Loaded question. Thank you. No, it's all good. It's all good. So in my humble opinion, I am a believer in UBI.
Okay.
I think that it is a key component to helping mitigate this disparity in wealth that we're going to continue to experience throughout our lifetimes and the lifetimes of our children.
Sure.
Will it be forthcoming at a federal level? Probably not so much over the course of the next 4 years. Will it become feasible at a state level? In a state like Colorado, where we have governance that is really focused on the needs of the common person, there's a stronger likelihood of that happening. The inevitability of it all distills down to an excellent observation you made, and I call it the dichotomy of wealth. It is tearing apart the fabric of our democracy presently,
Wow.
and there needs to be cures for it one way or another. And UBI certainly is one. Another one is, candidly, the death tax.
Interesting.
Yes, I personally think that if you want to cure the dichotomy of wealth, that you tax people that happen to pass away with more than $24 million to their name. And you do so aggressively and assertively, and you pass that money and share it with the community.
Interesting. Now, I wanted then, because I remember when I was also, because I've done some research with the UBI and the feasibility of it. The only issue with trying to tax the wealthy, or let's just say tax these corporations, because even Sam Altman, I heard Sam Altman, founder of ChatGPT, co-founder, and even Elon, they've both, actually agreed on these sort of type programs. They've said, hey, if these sort of programs were to come up, we would agree to it. Like ChatGPT would, agree to with the government to get taxed these to help create this pool of income for others. Now, the issue with that is the wealthy always finds a way to evade taxes, right? So could this be another sort of kind of situation where in theory it sounds great, but in practice it may never happen because then you're going to start getting all these loopholes.
How we fund it.
Exactly.
Right. And so let me just clarify one point. Generally speaking, people that are endowed pay a lot in taxes. So people that are making $400,000, $500,000, $600,000, $700,000 a year are paying $200,000-$300,000 a year in taxes. That's a lot of money.
It is.
And so there's particularly here in Colorado, there are a lot of people that fall into that category. And I can share with you as a 60-year-old man that when you aspire to that kind of income potential, earned income potential, oftentimes you focus on asking yourself the question, why should I work any harder? If 50, 60 cents on my every dollar earned is going to go to a governing authority, why should I work any harder? And that's a valid question that many people are asking themselves. And the answer really lies in perhaps I shouldn't be working harder, but I should be making more meaningful professional connections where I'm constructively helping people with the limited time that I have on this planet here and now in this life form. And so I think it's causing somewhat of a bit of a revolution. And I think I'm starting to see the start of the pendulum swinging back a little bit pushing back against AI and pushing back against this whole concept of being connected electronically versus what I like to refer to as acoustically, sitting down across a table from one another and having a conversation like we are today.
Right.
Which to me is very meaningful. Thank you for having me.
Absolutely. Yeah.
So did that address your question?
Yeah. No, I think it did. I definitely think it did. Now I don't know if I want to transition yet from the UBI because it's such a new topic, by the way. It is such a new topic. There's not enough people talking about it. I know there were some politicians that even started to bring it up because I think a lot of people don't understand the gravity that is at hand with AI yet. I don't think a lot of people see what's coming, and with the massive transitions. That's I follow TechCrunch, I follow Yahoo Finance, and the writing's on the wall,
right?
With the layoffs that are coming. Right. I'm already seeing it on my news feeds of the layoffs, and I've read the book Genesis that just written by Eric Schmidt saying, hey, there's going to be a massive transition coming. So so it is a new topic, UBI and all these sort of programs. And I bring it up just because, first of all, it seems like we're probably in the very early stage of this topic, but it's about to hit mainstream once people start seeing everything unfold in terms of the job losses and how AI is about to radically take over our jobs. And in my opinion, I do believe government will then be forced to do something, right? Especially when these corporations starts laying off mass amounts of people, and yet their earnings have been well.
That's right.
Profits are doing well.
That's right.
And so it's not like they're laying off because they're not doing well. They're doing well, and yet they're still laying off. So there's it seems like there's definitely going to be something that is going to have to happen, and it seems like UBI or these sort of type of programs are the attempt at the they
very well could be.
Yeah.
Another prospective solution, I'd just like to throw this out there, is that people that have wealth beyond anyone's wildest dreams, at a certain point in time, it needs to resonate that there is more value in giving back than acquiring. And I would hope that people that are blessed like that will eventually see the value in sharing their wealth. So that we don't have to have government overreach in creating programs to assuage the masses. I mean, because that's really what UBI is it's an attempt by the wealthy to influence government to assuage the masses so that we don't rise up and take them all down. I'm not kidding. That's how I think about it. To your point, something inevitable is brewing right now. It's increasingly challenging to get a job, keep a job, develop yourself in that job.
Sure.
So yeah, at a certain point in time, we need to recognize that we're all on this blue marble hurling through space together. There's very little difference between you and me and Jeff Bezos or Elon Musk. We're all human beings. We all have our works, joys, actions, and sufferings. And really, at the end of the day, it's not about how much you have, but about how much you can give and give back.
Sure. And I love that statement there. And as you're even saying that statement, it's funny, as one that my background's in, of course, finance, and I studied a lot about Adam Smith's ways of economics and capitalism, and then of course I also studied Karl Marx as well. People don't realize, and I really took note of both of their ideologies. And so when you say that, I can see And I'm processing that information through those lenses and seeing like, okay, yes, people like Jeff Bezos and Elon, of course, they've done great things to the economy. They've definitely bolstered the economy. They've created a lot of goods and services. They've done, and of course, so they deserve the wealth that they have, and absolutely so. But at the same time, if you look at it through the lens of Karl Marx and understanding the responsibility that these capitalists have to society, and the social implications that is really important that they be mindful of, because if they don't, if the right word is, I don't know if the right word is prophesied, but Karl Marx even said that there will be a confrontation, right, in his book, The Communist Manifesto.
Right, correct.
If there's no action taken, the invisible hand can't just always lead the economy, because if it does, the ones that keep, the haves will keep having, and the nots will keep not having. So there is always going to be that,
right?
That
there's nothing
divide.
More. Yeah, that's right. That's right. There really is nothing more powerful than a woman scorned and a man who can't put food on his table for his family.
Sure.
And if you get enough of those together, there is no government in any form that can hold them back.
Yeah.
And so that is a big fear.
Yeah.
And so at the end of the day, I think it really distills down to all of us recognizing and celebrating our similarities.
Sure.
Recognizing our similarities and perhaps celebrating our differences to a certain extent. But again, we are in an environment, because of years and years and years of quote-unquote trickle-down economics,
sure,
where the wealth gap has never been wider.
Yeah.
And the challenges of common folks have never been more demanding.
Yeah.
And it does feel like something is about to pop. It really does.
And I love this, because we're off the script here, and it's beautiful. And that's probably what sometimes one of the best things and best the conversations are to be had. To your point, as somebody that, like I said, I remember when I was in finance school, and I was studying the whole concept of GDP and all that, and capitalism. And to that statement you just said there, I truly do believe that capitalism is about to, at least in America, it's about to evolve. It's going to have to evolve, unless it's about to come crumbling down. That's what it seems, because of course we look at the current environment, we see how money printing and all these things that is going on a monetary policy standpoint is not necessarily, I won't say it's not working, because I'm sure certain people are going to be like, yeah, it is working. What are you talking about? But it's creating a huge divide. To your point, the trickle-down effect is not working. There are people being left out, and a lot of people is being left out. So I've been pondering on this and thinking through this a lot, where it does seem like, and I think even China has done a lot of experimentations of new forms of capitalism that we, of course, America is very individualistic, and it's, capitalism and all that, that's of course what's built this country to be as great as it is. But it does look like there's going to be a change and an evolution, because you cannot grow forever.
That's right.
Right? And so maybe a new form of GDP, if that's a new form of focus of what truly, considers the economy healthy, may not be profits anymore, but more so the state of the actual consumers and the individuals in the nation.
I agreed 100%.
Yeah.
Unfettered growth for growth's sake,
yeah,
is a detriment to how we evolve as a species. It really is.
Absolutely.
GDP is a fascinating statistic. We can only build so many houses. Yeah, we have a housing crisis now.
Yeah.
But, the planet can only handle so many humans.
Sure.
And at a certain point in time, measuring our productivity based on GDP alone is
Yeah.
falling is a little bit, in my humble opinion, failing ourselves, where it's sheltering us from the real kind of sort of challenges that we have inhabiting this planet with the other species that we share it with. I think that to a certain extent, people need to be empowered to pick themselves up and be afforded opportunities to be productive members of society.
Absolutely.
To do things to earn money so that they can support themselves. And the biggest fear of UBI is that it will facilitate this attitude that I can be a ward of the state indefinitely. And from my perspective, I see UBI as being a wonderful social safety net for people in need. But how do you define that need versus how do you empower someone to pick themselves up and add value to what we're trying to do here?
Absolutely. No, there's a lot to unpack. There's only two of us, right? That's right. This takes a whole bureaucracy, I guess, to solve, and that's that's I guess what those people that works for the state are doing, right? You hope so. Wow, it's crazy how an hour already passed.
Are we an hour in already? Yeah, that is. We barely got to handle our questions,
which is great. That means we were, of course, talking about some good stuff. So no worries. We'll definitely. We're definitely going to close it out for sure, but before we close, I still want to get out some good questions here in regards to tax plan and for 2025. I know we were getting very deep there.
Mm-hmm.
We talked a lot about AI, the UBI, and all those sort of things. Now let's kind of, I guess, get practical here since we are winding down on what are some effective tax planning strategies for people to look for in 2025?
Well, tax planning is critical for employees aged 25 to 34, especially as 2025 approaches with potential tax law changes like the expiration of the Tax Cut and Jobs Act provisions. If you recall, the Tax Cut and Jobs Act was a wonderful piece of legislation enacted in 2017 under the first Trump administration that really did a wonderful job coming up with a fascinating tax deduction for small business owners called the Qualified Business Income Deduction. And those provisions are expiring here at the end of 2025, and we need our federally elected officials to either extend those provisions for small business owners or come up with some kind of a cure to carry those tax credits forward, those tax deductions forward. Otherwise, small business owners are going to get hit with huge tax bills starting in 2026.
Wow.
So for millennials in this age group who are often juggling career growth, paying off student loans, saving for a home, or starting a family, the right tax planning strategies can reduce tax liability and build long-term wealth. So how can entrepreneurs maximize their tax savings in the current economic climate? Well, they're in a unique position to maximize tax savings by leveraging tax breaks and implementing proactive planning strategies. And the current economic climate, with its focus on innovation, the gig economy, and tax credits for small businesses, that offers plenty of opportunities for young business owners to reduce their tax burden, reinvest in their businesses, and build wealth. So here's a couple of examples. First is to, of course, maximize your retirement contributions. So if you happen to be employed and you have a 401k or some kind of a retirement that your employer offers, generally speaking, with a broad brushstroke, it's a best practice to maximize whatever contributions you can make to that. And I can go into detail on that as you see fit. The other is making sure that you are having adequate federal and state income taxes withheld from your wages by adjusting your W-4. The third would be to leverage your health savings account if you have the luxury of having a health savings account, contributing as robustly as you can to that, or your flexible spending account. The fourth would be to take advantage of tax credits and deductions like the student loan interest deduction, the Savers credit. Are you familiar with the Savers credit?
No, what is that?
Well, if you contribute to a retirement account and have a income that's below the threshold for single filers in 2025, that's $36,500. You may qualify for a credit, a tax credit, lowering your taxable income dollar for dollar up to $1,000 if single and up to $2,000 if married, filing jointly for making contributions to retirement. There's also other credits as well, like the child tax credits, tax credits for education.
Sure.
All very valuable to make sure that you look at and understand. Optimize your side hustle and if you have one. So make sure you're tracking all of your expenses, making sure that you are reporting all of your expenses, making sure that you're taking advantage of the more robust retirement contributions that you can make with your side hustle using a SEP IRA or a solo 401k. And then, of course, the biggest, I think, is to assume that our federally elected officials are not going to extend the provisions of the Tax Cut and Jobs Act, because there's presently what appears to be all sorts of infighting going on, and to plan for the expiration of those tax provisions. I mean, it's going to be a nightmare if those provisions aren't extended. And then, of course, to focus on tax-efficient investments. If you have the luxury of having an investment portfolio, taking advantage of tax loss harvesting, selling dogs in your portfolio towards the end of the year. When you are thinking about making investments, for example, understanding the energy and the green tax type credits for electric vehicles, home energy improvements, things like that. Build an emergency fund in a tax advantage way by contributing to health savings accounts, Roth IRAs, things like that. You contribute to a Roth IRA, you hold that Roth IRA for at least 5 years, that money grows tax-free and can come back to you tax-free as well. I think the most important thing, though, really distills down to finding someone that you trust that makes it a habit of trying to keep abreast of the tax laws and engaging in their services either, for hire or as a friend. So,
awesome.
Yeah.
Those are good. And absolutely, because I tax planning, I know we talked about that even in part one as well. It's such an important thing to do year round, right?
Yeah.
It's not just come January, February, March, we prep for it. But yes, it's super important to do year round. I want to, since we are hitting the closing point here, I want to maybe touch on the conversation of wealth transfer. I know it's not in here, but
Right.
We talked about the importance of wealth and building legacy even in part one. And I heard there is currently a massive wealth transfer happening currently in the U.S. The baby boomers are transitioning. There is that wealth transfer happening. So, what would you say, first of all, when it comes to these sort of vehicles, such as like trusts and other vehicles that allows wealth transfers to even occur and happen, I would love to kind of first of all talk about what these vehicles are and what what do you know about this wealth transfer that's coming?
It's huge. And, I'm just going to say this. I heard a fascinating quip the other day. The new definition of middle class right now is if you're the benefactor of inherited wealth.
Sure.
That is the majority of us are living paycheck to paycheck with a nominal savings, and dream about the lifestyle of our parents and grandparents where a family could be supported on a single income, and you can take your 2-week vacations to travel, and that just doesn't exist anymore. So,
Yeah.
With regards to trust, there's many, and they're fascinating, and they're generally governed by state authority. So you need to be keenly aware of whatever state you're in if you want to form a trust. But for tax purposes, There is no better way to privately transfer your wealth than via trust vehicles. They avoid probate, which is a public proclamation of wealth transfer upon death via the court system. And it's how people who are endowed effectively transfer wealth from one generation to the next. Now, does that do all trusts create opportunity to avoid estate tax? No, you have to be very particular and considerate of the trust that you form if you're going to want those trust assets to avoid the estate tax in general. So,
perfect. Awesome. No, that's good, and appreciate that response there. So then, wow, time just flew, didn't it?
it did. It did. It's always a pleasure talking with you.
It is, and as we are now essentially at the close, I always, I like to give that closing remark for you to just kind of, what parting words, last time you said your parting words was don't invite you to a party. So now in part two, what would you say? I know you said other things more than that afterwards, but what would you say is the closing parting words for part two?
I would say that in terms of the realm of taxation, that it is never been more important to make sure that you are receiving guidance that is appropriate and verifiable, and always get a second opinion, and that to be wary out there of people that are selling tax compliance and tax representation related services, because it's an unregulated industry.
Interesting.
Yeah, you don't need a license to sell tax services. All you need is a practitioner identification number. You need a license to cut hair, but you don't need a license to sign a tax return. And so be wary, know your tax practitioner, make sure that you trust your tax practitioner. At the end of the day, it all distills down to trust.
Yeah, indeed. Well, John, it's a pleasure again to meet up and talk about taxes. I know that sounds crazy to a lot of people, but I enjoy it. I like to be informed, and yet again, this has been such a great conversation. So I appreciate you.
Yeah, I appreciate you. I hope you have me back.
Absolutely. All right. Sweet. All right.
The information provided in this Wallet Guide podcast episode is for educational and informational purposes only and should not be considered tax, legal, or financial advice. While we strive to provide accurate and up-to-date information, tax laws and regulations are subject to change. Listeners should consult with a qualified tax professional, CPA, or financial advisor before making any tax-related decisions. Wallet Guide and its guests are not responsible for any actions taken based on the information discussed in this episode. For personalized tax guidance, always refer to a licensed professional or visit irs.gov for official resources.